Hey all, welcome to Bro Billionaire. This is Raghu here. Hope you all doing fine. I was busy with my personal work, hence took a long time to bring you a new video while my other colleague was sharing a fantastic Elliott wave analysis on Nifty and Bank Nifty. Hope you guys enjoyed the last 2 days trendy and made a lot of money. Now here today I want to bring you a new video. Now I'm going to tell you it's a very simple video which most of you are aware, but in this video I'm going to show you how to determine the trend and also a method to scalp. Remember, if you're trading in options, especially because of when market is falling, when market is falling, the volatility, the VIX index increases, and because of VIX, there will be a lot of fluctuation in the option premium, and so it becomes more dangerous. But still there is a way how you can quickly scalp money, and definitely you will be able to make money from tomorrow itself. Now first I want to tell you, you all know that uh, market moves in waves, right? It moves in waves. Which one shall I choose? Oh, come on. Okay, it always moves in this way, right? So you know about this. Now I want you guys to pay attention to only these things: M pattern, N pattern. You can call it as bolt, a lightning bolt, right? Or an inverse lightning bolt, and W pattern. Now why exactly I want you to focus on this? I'll tell you, there's a reason behind this. The reason is, whenever you get a candle, an M pattern, it can go down or it can go up. Now in this pattern, when you see a double top, usually a double top cannot be or will not be broken in the first attempt, 65% of probability, right? Same thing for double bottom. Now when do you get a trade? When this moves back and breaks the double top, or when this comes back and breaks the double bottom, and sometimes when it pulls back and breaks this high. This can be one candle, this can be next candle, this can be 1 2 3 4 5 candles or 10 candles. Remember this. All right. And also there's very important thing I want to tell you. Whenever market is in trend, let's assume this is the trend, it goes this way, right? Now consider this is uptrend. We'll consider this as one leg pullback. It can be one candle, it can be back to back 2 candles or 3 candles. Same thing. This is as one leg pullback. After one leg pullback, if this high is broken, then it will count from the next. This is one leg pullback. Now here we have one leg pullback, 2 leg pullback, 3 leg pullback. Basically, if you join the candles, you can also consider it as a swing. But understand, market is going up, you may get 2 3 red candles simultaneously, pulls back, another 1 or 2 red candle pulls back, right? Sometimes here 2 leg. Now what exactly I'm trying to communicate here is, from price action standpoint of view, in any established uptrend or downtrend, you cannot have more than 4 leg pullback. Understand? It goes and then pull back. Within 4 leg, market has to go up. There is no 5th and 6th leg. If it goes, it is considered as sideways. Understand? I'll repeat once again. In any established downtrend or uptrend, downtrend means consider this as green candles pullback. You cannot have more than 4 leg. Within 4 leg pullback, market should resume the trend. Otherwise, consider it is sideways, or it might be changing the direction. So you can use a 20-day simple moving average. So why I'm using 20-day simple moving average? Because a lot of other experts are using it, where I have learned my price action, and there are no added advantage with EMA or SMA, because both are lagging indicators. But 20 SMA is magic. So far understood, right? M, W, lightning bolt, upside, and inverse lightning bolt. All your flag pattern, double bottom, everything is covered within this. Understood? Now this is the trend from yesterday. Now watch this one. Do you see any trend here? By visible eyes only you can tell that there is no trend. Can you signify how many swings you have? 1, 2, 3, 4, 5, 6. So you have a lot of 5, 6 swings. So you cannot identify the number of pullbacks. First I will show you the pullbacks, then we will go to the pattern, and then the scalping, so that you can identify. Now you know that 20 SMA, price above that is in uptrend, price below it is in downtrend. But add little context, guys. When 20 SMA is flat, there is no trend. When it is sloping down and up, there is trend. This is the most simplest way of understanding market. Now how to beat your fear factor? Now market opens yesterday, comes down. Okay, so you know this is an established level opening, easy, you know, from opening itself came down, so it will be strong resistance. When price goes up, market price comes down. Now if you want me to mark it, comes down, this is what? N shape, kind of N shape, right? Do you see it as N shape? Where did the market fell from? See here. When you go to smaller time frame, you can see a small N shape. That's the reason I made it as 5 minutes, so that you guys can identify it. Now market comes down, tries to know the 20 MAC, how it is reacting. Now this is the opening, right? Always count. Okay, this is upside, this is opening. So one green candle is what? One pullback. You can consider it as one pullback. After that it goes down, which means the low of the first 5 minutes candle is broken. Now you can look for long only when the price goes up and breaks the top. Now this was again a previous day resistance if you watch, but I don't want to get into resistance and support. I want you to watch only the pattern. Now price comes here, goes, breaks. This is where I want to see how many candles you see after 20 SMA is broken. How many green candles you see? Market is going in one simple direction. But because of volatility and because of the fluctuation in the option premium, most of the times you will be very, 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 very frustrated. Now here, I want you to focus on one full bodied candle, any candle it might be. And then I want you to focus anyway. I'll cover the scalping now because it is in downtrend. I want you to focus on this. The condition is pretty simple. You have a decent bodied candle with small wick where the closing is, strong. Why small wick is? Closing is strong. And the next candle, see this open is 17,048. It opened here within this candle. So I want a candle, the follow-up candle, opening within the high and low of the strong closing candle. Now below 20, it is downtrend, right? Now you know the trend. And when it pulls back and comes down and breaks the low of this candle, that will be your entry. This again a decent close. See this one goes up, comes back and breaks. That will be your entry. In volatility, now already global markets are shaking up. Dow Jones is had one of the worst fall in the current year, more than 1,000 points. So in this scenario, tomorrow, if market gaps up too much, you need to implement scalping. We cannot wait for in options because it can hit you very badly. Now here you don't get any trade. Now what will be a stop loss? I suppose this candle opened here, or this candle opened within the low and high of this candle, went up. Now your stop loss will be This one. Suppose if it reverses in the same candle without giving you money, you will be exiting exactly where it opened or where it pulled back. That will be your stop loss. Understood? This is the most simplest way. Now you can do this on any time frame, 1 hour, 15 minutes or 5 minutes, but you can have scalping. And my scalping, sometimes if you have seen my profit screenshots, it will be few seconds, right? It won't be even in minutes. It will be few seconds. I push around 10, 20 lots, make up to 10 or 15 points, exit. Even 8 points is okay. This is not about stop loss. It is getting the money, how much money you can get. Sometimes here there's no trade triggered, or it just came down and pulled back, hit your stop loss. But watch all the strong candles. The condition is pretty simple. Now this is Morobuzo. If the next candle opens exactly below that and continues going down, you can do that also as scalping. It gives very strong movement. Where it closes, the next opening itself is there, and if it's continuing, you can continue there and use scalping. Here, the stop loss is very less. What happens? What happens? Most of the retailer, after this candle moving down, then they will enter. The catch in this scalping is, if the opening happens outside this candle, you just need to enter and the momentum should continue down. If it pulls back, I want you to exit. I don't want you to wait. But suppose in this candle, say here, the candle opens within the high and low, wait for the candle to break the low and then enter. And whatever money you can get, you can scalp it and exit, do the same thing. You have to wait for a strong bodied candle. That's all. Simple. You can attempt it tomorrow and you will definitely make money. Remember the method. Now, very strong market comes. Let me close down. Now the pullback strategy. We all are afraid, right? We all are afraid. Now this is a very strong downtrend below 20 MA. Watch, I'm going to just mark it for you. All green candles below 20. One leg pullback, close. One leg pullback, and then the next candle, when it breaks, you have an entry in the follow-up candle. This is one leg pullback. Market gives weak candles, and then this is one leg pullback. So you have here two leg pullbacks, right? Watch it here, isn't it? Two legs pullback. Then when this green candle low is broken here, you have an entry. Now you can consider this also as three leg pullback because all are at same level. Now did you, I mean, if you had another four leg pullback, then most of the times market would have gone sideways or reverse the trend. Now how many legs? I told you maximum you can get four leg pullbacks. Now where did I learn this from? I learned this from Dr. Albrooks. Okay, he's a price action pioneer. You can read his books from Amazon. Now this one of the method, it's a very effective method I picked up from his trading style, so all the credit should go to him. But still, I am using only one of his style. So if you want to learn more, you can purchase his books and learn. Now here, once again, watch here how many legs pullback you're having. How many legs, guys? One leg. Another green is two leg gone down. Now watch here. One green leg, one leg, two leg, three leg, same level. Okay, and then four leg. Now here, this was a very interesting point. I took a stop loss yesterday. I was short here because I saw the strong trend. I knew it's going to break. Unfortunately, it went down and then started moving very high. I immediately countered, scalped around the 10-15 points, and then when market came down, I entered again. Now, anyway, the point to notice here is how many legs pullback you had. 1, 2, 3, 4. Because after every two leg, any candle breaking them, you need to count the legs or bar counting. We call it as bar counting. Fresh. Now you had only 4 leg pullback, right? You did not have 5 leg pullback. So remember these numbers next time. Now again, watch here. One leg, You have one red candle, and then you have another two leg pullbacks, and then market immediately goes down. Now, after going down, again, you have one leg, two leg, three leg, day ends. Now we are in option trading, but we have a established trend, right? This is the established trend. Market is in downtrend. Now again, since it is in downtrend until the previous fall, where is the previous fall? The strong after the open of previous day. Do you see here? Very strong until this is taken out, right? We are in downtrend. This is another price action. Whenever market is in downtrend, usually people consider the last swing high. If the last swing high is taken out, market will be reversing. This is applicable and works fine with stocks, but with options you need to identify the areas where was the previous strong selling zone or strong buying zone. Until that area is not taken out, you cannot consider it as market is in reversal mode, even for intraday perspective. So today when market opened, I did not trade, I traded later and I made 5K. But what I wanted to tell you was, okay, we are in downtrend. Now count here, start the bar count. One leg, two leg. Again, it comes down. You can consider it as three leg. Do you see fourth leg here? Continuing on the higher or on the sides? No, you don't see it. So you can consider after market breaking the low of this, again, one more leg, two leg. That's all. So suppose this morning, if you had more than four leg, probably you should have been ready mentally for a sideway or a reversal, possible reversal after the break of this. That is how you need to do the bar counting. Now, the most important factor today, even today was expiry, right? In expiry, what is this? The high is broken here. You can enter here, right? You could have scalped 10-15 points in a single candle. Watch this one. I'm going to make it very big for you so that you can understand this particular candle. Okay, it comes down, goes up, comes down. This particular candle, again, I need not tell you that the doji is always a decision making candle. After doji, who has made the decision? Buyers have made the decision. Then these candles come test, they are not able to break the doji. What happens next? This candle is breaking the high. Once this candle breaks the high, even during the breaking, you can enter and scalp it. Or you can, after this candle, see immediately this candle opens within this candle, enter, scalp these many points because this has broken it. The catch here is this one particular candle has broken the high of 1, 2, 3, 4, 5, which is pretty decent. 5 candle high is broken, so there is a lot of bullishness in this. That is one way. Now, do you see any other patterns? Watch it, guys. Watch it. One, bolt, bolt, market pulls back. Now watch again. So what I'm trying to tell you is it's the same pattern, whether you call it as a flag pattern, instead of giving it a name and trying to remember everything. If you remember WM, the N, inverse N pattern, you can easily identify. See, this is an inverse N for me, isn't it? See here, so beautifully it's coming, came down, pulled back, then again broke. What is the catching here? The catching is this low is broken. Yeah, after breaking, it comes back and tests the same low, this low. What is the last swing low? This is the low, right? If you want, let me show you. Be patient. Do not think I'm talking too much. This is a concept. If you understand this, you can never go wrong, isn't it? So watch this one, guys. So this is the last swing high. Okay. In this swing high, what I'm trying to do here is I am trying to capture the low of this range. Now this is a inverse N, market breaks. You have from here another inverse N. So whenever the low is broken, you can mark it and you can scalp the points here. This low is getting broken, scalp the points. Now when the pullback happens, do the bar counting. This is one leg because you have a small red, although it is not broken. This is two leg. And market starts coming out. You will start gaining the confidence. Okay, within 2 legs, market is coming down, right? And then you watch for M pattern, N pattern, or the inverse. And see here. Now this is M pattern. Once this low is getting broken, you can enter here. Understood? It is that simple. And what else you can do? What else you think? Last swing high, another swing high. So this is one high, the next high is lower highs. This is one low, the next low is lower. So whenever you have two lower lows, lower highs, and then we have three now, three lower highs, three lower lows. Consider market is currently in downtrend. And if you have a 20 SMA, even if 20 SMA is breached, wait for the last swing high, not this swing high. I'm talking about the previous one, the second swing high to be broken with price action. Usually what happens is after the three lower highs and lower lows, market comes back and tests one of the low. Which low it is testing here? It is testing the first swing low. This is the area it is testing. Watch for some price action like M pattern. Try to read the market with naked eyes. Draw a trend line. Join all of it. Okay, this area is near the trend line. Now you have a confluence of areas. Now then once 20 SMA is broken, enter. You can keep the stop loss above the 20 SMA of your entry candle or the next candle and continue the trade. You can start whenever you are afraid you're losing money. I mean, today was expiry, right? Do the bar counting. Okay, one. I should not have four. Two. Third one, weak to body reversal. See here, one leg pullback, market goes down. One leg, two leg, three leg, market comes down. This is again new fresh, one leg and two leg. This is exactly how you need to count bar counting. And the pattern. The pattern is not exactly double top, triple top, head and shoulder, cup and saucer, cup and handle, sorry, cup and handle pattern. Not don't give the names, it will be too much confusing in your brain. In the real-time market, what you can follow is, okay, this is a W pattern. Okay, I have a W move, it went, okay, it's a N pattern, market is breaking the low. Mark all the swing highs. Even for your naked highs, you can understand which side price is moving and who is moving the price. And if you add trend lines, 20 SMA, and then the bar counting, the number of leg pullbacks you're having, that should give you an idea what kind of trend you are in. And trust me, it works like a charm. And do not forget about the scalping. See, all these areas are scalping areas for me, right? All these areas, scalping areas. Below 20, think only to go with the trend, not opposite trend. If above 20, okay, here, now here it did not, it hit the stop loss. After this, you had decent up moves. Wherever you have a proper close, and if a candle opening within the high and low of that candle and breaks the low or high above 20 or below 20, go with that particular trend to make money. Thank you all. Have a good day. Please do subscribe, like, share, and encourage us. Thanks a lot.